The cynical voices that opposed tax cuts grow smaller and weaker, and the American people grow stronger. I heard one of our opponents stand up the other day and say, this is for the rich. This is for the people of middle income. This is for companies that are going to create jobs. This is for very, very special people, the great people of America.
Welcome back to The World Over. That was President Trump promising tax relief before year's end. The U.S. economy is riding high. What's causing it? And how will the markets and your pocketbooks be affected? With analysis, I'm joined by the founder and portfolio manager of the Ave Maria Mutual Funds. Please welcome back to the program George Schwartz, who joins us via satellite from Michigan. George, thanks for being here. And happy birthday. I hear it's a big day.
Yeah, thank you, Raymond. Great to be with you again.
George, on Capitol Hill, Republicans, mostly Republicans, are hoping to pass this tax reform package. It will lower the corporate rate down to 21% from 35%. What impact might that have on the economy?
It's going to be positive. It's going to be positive for almost everybody, Raymond. There may be a few quirks in the new tax code as proposed that hurt the highest income earners. But apart from that, it'll do a lot of the things that President Trump has been talking about. That is, help the middle class. It's going to help corporations with that very sharp reduction in the corporate rate. It'll make them more competitive, as a lot of Republicans and conservatives have been saying, make them more competitive in the world market. And the increased profits can be reinvested or invested in corporate America in terms of creating jobs, adding plant and equipment. And I think it will help the middle class dramatically. And I'm a Republican and a partisan, I guess, but I'm a longtime believer in supply-side economics as preached by my good friend Larry Kudlow, who's a member of our Catholic Advisory Board. He's been pushing the White House.
George, Larry Kudlow has gone on record as saying he didn't consider this a real tax reform package because, in fact, it raises rates on the upper income. As you just said a moment ago, supply-side economics is all about cutting taxes so that those in the upper brackets will then invest and start businesses. If you're raising the personal rates, won't that do the opposite?
Yeah, it's not a perfect package, clearly. And on the other hand, it's not a package that looks like it was written by Chuck Schumer and Nancy Pelosi either. It'll have benefits, but not as great as Larry would have liked. But Larry has pushed for reduction in corporate tax rates, and that's the key phraseology, corporate tax rates. And if that drops from 35 to 21, that will be a very good positive for consumers, for investors, for corporate America, working men and women, and I think it'll supercharge the stock market and the economy. The economy is doing well, as you mentioned. It's corporate profits are probably going to be up 13% this year, and based on the tax rate cuts, probably another 15% next year in 2018. So a lot of that will flow to benefit Americans across the board.
Now, the estate tax was not included in this program. In other words, under this bill, the estate tax remains in place, but the estate tax deduction will be doubled. Is that good enough for you? Should the estate tax have been repealed?
I think it would have been ideal if the death tax was repealed altogether. It doesn't raise all that much money, and it only affects a pretty limited number of people. And the wealthy people that are most affected by death taxes or estate taxes have already been taxed 6 ways from Sunday throughout their life, and to have to pay taxes again after they die is ridiculous in my view.
George, in your analysis of this tax bill, what impact will this have upon investors, people that invest in funds like yours, the Ave Maria Fund, that see capital gains? Will this hurt them or help them?
Well, it's not finalized, I guess, yet, but one provision is harmful to long-term investors. That's the provision that's going to require individual investors to sell stocks on a FIFO basis, so-called FIFO, first in, first out. So the oldest shares they bought of a particular issue have to be the ones sold when they start taking profits. That's distorting the economics of investing, because most investors that have invested over the long haul have bought shares at low prices and then somewhat higher prices along the way. And for a long time, people have been able to select which lots they want to sell of a particular issue, and to their tax benefit. But if that provision is in the final draft or the final version of the bill and it becomes law, that will be a negative. I don't think a world changer or a terribly drastic thing, but it'll be a negative.
Yeah. You know, last time you were on the show in April, George, and we looked this up, the Dow was hovering somewhere around 18,000. It is now moving toward 26,000. Is that kind of growth sustainable? I mean, there have been record after record broken over the last few months as it continues to rise into places no one ever expected it to go.
Well, as I've told you many times over the years, Raymond, nobody can outguess the short-term moves in the stock market, and only a fool tries to do that. But throughout the Obama years, you know, the market went up, and people would say to me, gee, Obama must be doing a pretty good job. The stock market's going up a lot. And I used to always say and still say that if it wasn't for Obama's negative policies, the market would have gone a lot higher during the Obama years, the Obama 8 years. And actually now, with President Trump in there, it's continuing to go higher, and I think it will go higher based on the policies of tax reform, based on especially on the policies of deregulation. Under the Obama administration, the Democrats really had the foot of government on the neck of capitalism. They stifled capitalism and hurt capitalism with regulations, especially regulations, but also high taxes and an unfavorable attitude towards growth in the economy. So with President Trump in there now, he's unwinding a lot of those things and removing the foot of government off the neck of capitalists. And we're starting to see the benefit of that in the stock prices. And if this tax reform is as good as I think it is, and it's not great, but if it's as good as I think it is, it's going to boost corporate profits and probably stock prices in the new year. No guarantee of that, because as I said, nobody, including me, can outguess the near-term swings in the stock market. But the trend is up, and long-term investors should do well in well-managed companies, American well-managed companies, like the companies we have in the Ave Maria Mutual Funds. Those funds are up, by the way, this year, up between 15 and 25%, and that may not happen again in the new year, but maybe it will. Who knows?
Yeah. Well, here's the big question. As you look at the trend, you've been looking at this for a long time. You've been watching this market go up and down. With it riding at these stratospheric numbers, is now the time to get out or get in? What would you advise people?
I think I've said before, and I'll say it again, any day is a good enough day to buy a good enough stock or a good enough mutual fund. And don't try to guess the near-term swings. I don't think the stock market's a bubble.
You don't?
Some portions of the market are a bubble, and that's one. One portion of the stock market is a bubble, and that's the index funds, the so-called passive investing mania. And that, as you probably know, is a situation where money has flowed out of actively managed mutual funds into the so-called passive investments or index funds and index ETFs, exchange-traded funds. And those things are managed in a way that if they get another $1 billion in today into an index fund, they just have to buy those same stocks. And the ones that are the big capitalization stocks, the so-called FANG stocks, keep going up because those index funds keep buying them. Those FANG stocks are, Facebook, Amazon, Apple, Netflix, and Google. And they are high-priced. We own none of those stocks in our mutual funds on a valuation basis, plus the fact that they're all offenders. Well, we call offenders. They all contribute to Planned Parenthood. Corporations contribute money to Planned Parenthood, the biggest provider of abortions in the world. And so we don't invest in those, and for those two reasons. The fundamentals don't warrant it, in our view.
Before we run out of time, I've been reading in so many of these financial publications, they're talking about Bitcoin and these cryptocurrencies. People are dumping millions of dollars into invest in what is essentially internet currency. Your thoughts on this? A wise move or risky, given that it's not regulated anywhere yet by governments around the world?
I think it's not only risky, Raymond, I think it's foolish. That is a bubble. The Bitcoin is a bubble. It's the price of Bitcoin has gone up more than 1,000% just this year. And I don't think it's a currency at all. I think it's a speculative vehicle. I don't think it's a currency. I don't think it's a store of value. And I would avoid it like the plague.
Wow.
I think it's going to zero eventually. I don't know when.
Yeah, well, it's like all these, I mean, it's essentially a worthless commodity, if you will. So I don't know why people are, it's just the race to invest in it that's driving the price up, not the thing itself, because there's nothing there.
Yeah, there's no intrinsic value. And it does attract drug dealers and other criminals that don't want to have their financial transactions monitored or traced. But it's a mania. It's a bubble. And I would totally, it's not an investment by any stretch of the word.
George, we're getting a lot of emails from people who are saying they want to get into the market. A new year, I'm sure you see a big boost in the new year because it's when people, begin to invest. They think of, okay, I'm going to start anew. This is the year I make a difference in my life. What is the proper breakdown, if you will, in your mind between stocks, bonds, mutual funds, and hard blue chip stocks? What would you advise people?
Well, it all depends on the individual, Raymond. Depends on their age and their investment objectives. But historically, for the average Mary or average Joe, the mix of roughly 70% stocks and 30% bonds is a pretty good mix, I think. And the stock portion, the equities or equity mutual funds, is the portion that will give you the capital appreciation over time, especially if they're well-managed funds like our Ave Maria Mutual Funds. And the bond portion, whether that's in individual bonds or in bond funds, gives you the stability portion. And the bond portion should not be viewed as a capital appreciation vehicle, even though for the past 30 years, bond prices have gone up as interest rates have gone down. But that's starting to change right now. Interest rates are starting to go up. Bond prices will be declining, especially the long maturity bonds. The bonds in our bond fund, the Ave Maria Bond Fund, are very short maturity bonds and very high quality and would be not as nearly susceptible to rising interest rates as most long maturity bond funds.
And George,
but it depends on the individual. And
there are some who look at a fund like yours and say, now wait a minute, the heart of this thing is morally responsible investing, not necessarily the investment that's going to give me the most bang for my buck at the end of the day. What would you tell them? Do the two go hand in hand, or are there times where they are opposed, making a good return and responsibly investing your money?
Yeah, we practice what we call morally responsible investing, and that means we follow the advice of our Catholic Advisory Board, who have asked us, that board has asked us to screen out companies related to abortion, companies that perform abortions like the secular hospitals, companies that are insurance companies that pay for abortions, and so forth. Also, they've asked us to screen out companies engaged in embryonic stem cell research, companies that contribute money to Planned Parenthood, and companies engaged in the distribution or production of pornography. So we screen those companies out, and it only screens out about 150 companies out of the Russell 3000, about 5% of the companies. And our analysts and portfolio managers have had no problem getting very good investment results with the 2,850 companies in the Russell 3000 that do not offend these core principles of the Catholic Church. And people ask sometimes, well, how can you get good investment results if you have to operate with one hand tied behind your back? And that's not the case. Most of those 150 companies that we don't want to buy aren't ones that we would have wanted to buy anyways, for fundamental reasons. They either have too much debt on their balance sheets, or poorly run, or have a bad business plan, or just are not good companies anyways. So we've been able to run what we call clean portfolios without offending some of these core principles of the Catholic Church, and produce good investment results for our 100,000 plus shareholders.
Excellent. George Schwartz, thanks so much for being here. If you'd like to know more about morally responsible investing, visit AveMariaFunds.com, or you can give them a call, 866 Ave Maria. George Schwartz, thanks again.